Well, good morning, everyone. Hey, it's Shooter Scott Henderson. Well, thank you for joining. We're going to jump into some charts. Of course, at the end of the presentation, do please review our disclosures. So I'm going to start off with the NASDAQ. And I notice here we're sort of in what I refer to as peaking drive 2 here. You'll notice the RSI down towards the lower side of our floor. We peaked out on the 19th, and now we're putting in our second drive here, which roughly is coming in today. And so we either are going to roll over here, or we're going to get one more peaking drive, and I think it's going to come in right around 537. I think at this resistance band would be a logical place for us to reject, considering we've rejected 2 other times. So, however, I will say this. If we do get above this, then we're going up to about 5.7. It's not going to slow down if we break out. Just from the euphoria that's been in the tape here and how consistent and how shallow the sellers have been coming in. Right now, we have a lot of people frothing at the bit because the data really doesn't look that bad coming out from everything, even with the increased inflation numbers, or pricing, I shouldn't say inflation. Inflation numbers are lower, but retail pricing clearly has accelerated. So with that thought in mind, I'm at a crossroads. I don't really want to add longs, but yet there are a lot of good setups. So structurally, I've been trying to stay within that box that I like to stay in, where we have some decent upside. Now jumping over to the SPY, as far as our numbers, very similar look. However, I don't see this as being as aggressive as the NASDAQ because of the range of the candle. It's still holding some decent breath. So once we get which according to Elliott Wave, at least the Elliott Wave tool I have here in, what the heck is the name of this app? This charting app. I would suspect that we don't get much above this 602. I think that 600 is going to be a hard ceiling, and then I think we reject. Now, the question at that point is, do we come back in and test lows at 573 and then continue to all-time highs? I think that's still up in the air. I think the tariffs play a big role. So let me jump and take a look at some names here. Now, I'm looking for safe places to go where inflation is going to benefit us and higher rates will benefit. And, PPLT is one that I like. If I go out to my weekly chart on this, we have some significant upside in the look here. My target is actually up at 109 on this for the longer period of time. So, cash secured puts I like. I'm going to like them a lot with certain names because it's sort of a safe way to enter in. You get paid now. If you end up getting those shares get put to you at $95 as an example, you're just going to average in, because at this point, we're not going to break down from this we're going to head towards all-time highs. If you come out to the monthly and you look at really the long-term history on this, we are in this longer-term flat, where we pushed all the way up to 120, in 2021. When you look at this, we break out, we have a potential to get back to $150 longer term on this as a metal. So that's, my thought is risk $95 on. Now, AMAT is setting up again for another launch, I think, where my target, I'm going to put it up here at about 197. We had one little trade there, and I had everybody trim. I think it was right here, 168, the number we had. Not recalling specifically, but I think we're going to break above these highs at 176, and then 1618 fib at 197.50 is a viable target. At this point, risk trend support, which is roughly $1.50. Now, you'll also notice the charts that I posted in chat all have a trend support risk number. I started plugging those in there because I at least my opinion, I don't know, take it or leave it, right or wrong. My opinion is trend support is absolutely the best way to manage position. Trend support breaks, you cut 50% of your position, and then you're just trailing from the balance that's there. And it's a safe way where it doesn't require a lot of time to manage. That's my 2 cents. I want it to be simpler. I tend to manage my stops a little more aggressively. Like for example, I will have a multiple of stop percentages set on a symbol. At that point, when I get taken out on one, I let the other one run. And quite often I have 50% of the trade with no stop at all. But let's take a look at SERV. Now we're going through the names. I think AMAT actually was maybe last month in Swing Trade Notes. SERV, I believe, was last week's. So Our alert came in at 11:45, so we really haven't done much, but it hasn't done anything wrong. It's just building this base out, which is what we thought it would do. Ultimately, we've got a sort of a shallow target on this at the moment. I'm not targeting the 618. And the reason being is because where we've rejected price here, I think there's a good possibility we get back up to 15 bucks and then it fades. But still, I like the trade to the upside. I think it gets a little more FOMO from the AI trade and the stablecoin trade. Just because the server side, Server Now or Service Now is really pumping, connecting everything to AI. So you'll find that that's specifically where my thesis is. I want to stay in AI-driven growth because it's something I have some serious conviction with. So I want to make sure I stay on the right side there. Now, QBT, we're a little below our alert. Our alert was at 13.29. We back tested, didn't take out the risk off number at 9.45, so it's still a hold as far as I'm concerned. Target is 18.45. Not a bad spot to enter if you don't have a position on. Then PDYN, we had entry at 740 was where the alert came out. We're targeting roughly 950 on this, roughly just a little shallow of the 618. And that just has to do where my conviction here is where the prior breakdown. If we get a wick up, of course, I'll hold into the wick, but otherwise I would be trimming at 950 and then send the balance of what you have open to a trailing stop, equal to, 8 or 15% of what your gain is. All right, let's take a look at LUNR. Now we alerted as an entry at 1133. It's broken a little below there. Again, our risk number, our stop number is down at 950, so we haven't gotten anywhere near that. So it's still building out this. I still expect it to launch to about 16 bucks. Now, UUU is a refinement back to America play with rare earth minerals. We're going to see some kind of funding mechanism for this to bring more of that processing of metals back to the U.S. And this was one of the names that I found that worked for that. We put the alert out at 489. We're up about 546, so that is working halfway well. At the moment, we've got a target of roughly 725. ONDS, we put our alert out at 118, right? Our risk was 115. Target's roughly about $1.75, and we're actually doing a pretty good job of getting there right now. Just a short, quick trade, for 30%, $1.50 calls that were open. For a shallow name as far as price, it's got a lot of upside. And I may decide to keep a piece on after that. My mindset is if market holds up, I have to find a place to hold something. And, obviously this is not a bad place to hold something if we're continuing to work our way to the upside. Back on that same thesis of rare earth MP materials, this past alert was at 21. I actually had put another one out around 20, I think about 6 weeks ago as well. Right now, I'm just looking for 50% back at 24. I might extend that, based on the euphoria and the volume that comes in here. But, we're kind of wanning here a little bit. I would have liked to have gotten more of a bid off of the beautiful bill that was passed, but we didn't. So I don't know if that manifests or not, but I do still think we got a decent shot towards this supply zone up here at the $24 level. Let's take a look at IoT. I just love the flag. When we break out, there's a greater shot that we blow above the 618 here because of how high and tight that flag is. That's just, there would be nothing, I think, that would slow us down to 58 on this. So this is one of my more favorite looks right at the moment. Risk maybe 41.50 if we get back down there. I don't believe that we do. But my initial target is 54. Let's jump to ABEV, ABVV. We alerted at 186, basically coming out of this. Roughly, I'm targeting about 197. I might trim at 193 if we slow down a little bit, but right now, just with how shallow the volume is coming into the squeeze, I think I want to let it run up to that 618. That's just my thought. But the original theme was 50% back at 193.87. But as I looked at it this morning and how euphoric it is and where RSI is, etc., I just liked it a little bit higher. So I've raised that target just a little bit. And risk still is $1.80. Now I would probably move this up to 183, 185, once this next candle prints. But for the moment, let's just keep that 180 on as far as the stop. Now, HIMS bonds, we got a nice flush on that acquisition. Acquisitions usually are not good for the buying entity. It usually is a headwind on price, and by the end of the day, we got that. Now, I really like this between 48 and 52 if we get back down here. Now, it's not that I've lowered my target. It's just I'm targeting 50% back off of this measured move from this 4,725 low and this 514 high, and this back test number that came in at 522. So I'm measuring the next extension, and I'm always looking for 50% back. Reason, it's my margin of safety. I'm right there, well over 75% of the time, and I just am comfortable. It's easy for me to use from a targeting standpoint. But I do expect 100% fib on this with HIMS if growth continues. They continue to add ratios that they're currently doing and the partnerships that they're striking with different healthcare type services, home health and other things. I just see this continuing to grow. I think they've got a good spot. I think they have a great marketing campaign. They're targeting the 25 to 30-year-old females very well as far as advertising is concerned. So I see that heading to the upside. And let me talk about KRE for a second. I will probably roll KRE if it doesn't work. In other words, if I'm still holding this, I've got July, and I'm probably going to keep something on in the banks, especially with how big the budget and everything's going to grow. So this is sort of my insurance. It's like going out and buying a put in equities, but it's another way to keep a risk-off type of insurance in place. So I'm doing this between the VIX and KRE. But at the same time, my position size is going to tell you a lot about how much conviction I have towards a crash. I mean, I would have 5 or 8% of my book on in KRE and VIX, and you would hear me constantly adding to it if my conviction was waning. And my conviction really is, I think we stay in that flag that I've pointed out in the SPY. However, I do think there's a strong possibility, and we're seeing it in Meta right now, where we have some exponential growth from stablecoin, especially in the Mag 7. I haven't really seen how they're going to monetize that, but we get any kind of whiff that the Mag 7 is going to be able to monetize that like they were able to monetize AI. And that's just a break off of the CapEx that they're already doing. So let's take a look at SMCI. Now, we put on a cash secured put yesterday. We alerted right about where we are at 43.13. I sold 40s. I'm looking for the 1618 up around $55. This is back to my server thesis. We've gone through phase one in the AI chip. All the chips are sold out. All the facilities are either built or being built. And then we have our next tranche of chips that are coming in from everybody and their mother besides NVIDIA. Now, I think NVIDIA has some decent upside here, and I think SMCI is an easy way to play here because they have the capability of coming in and maintaining these servers, and they have a decent history of doing this, even though some people might not like them, meaning Elon as an example. So let's jump to Affirm. Now, we alerted at 45.54. Risk right now is roughly 49. I tightened it up quite a little bit. We break below this, obviously I'd be out. Target right now is roughly 60.90. Now, Unity, we threw that in this week. We alerted it at 24.54 on that pump volume. I'm not recalling the news, but hey, we're in it. Roughly I'm looking for $30 initially. Then I'll start trimming that position. However, I do want a longer term position in Unity. I just would rather have let me just go back and use the SPY as an example. I would just like a back test to maybe like 540 so I can have some conviction to the upside. I want some kind of pullback that holds, that's going to give me some conviction towards heading back up to a larger number. And if I jump out to the weekly chart on Unity here, we have really got a solid foundation that we built as far as where we are. So we break above this 31. That really don't get bullish. This is just an early bet that I got a shot back to 30. If we get a breakout of that 31, bucks roughly. Then we got a shot up here at 43 bucks. Now we're in a bullish mode. And then, I'm looking for an 80 to a $90 move on this if we recover with any decent volume. So let's take a look at net. Go back to my daily chart. Now, my target is 190, and I've really tightened up the stop on this. So roughly risk is 164.94. It breaks that trend support, I would be out. You could push it even a little tighter, which would be up to about 168, but that's really up to you and how you want to manage your book. I don't have anything on in net right now. I'm just trying to help those of you who took it from 6 weeks ago to stay in it, kind of thing. All right, now looking at pins, we're breaking out here. 1618 is 35.97. I'm going to come out to the weekly here. Now, I've not, they lost. I'm forgetting the Chinese company that was advertising like a lunatic with them. That really, it was like 30% of their ad revenues on Pinterest came in from there. But we get back above this 40. We do have a shot for an increased breakout up towards about 60 bucks back to the shelf up. So, it has some nice upside, nice structure there. If we have any kind of strength in those advertising revenues where we have a little more conviction from retail, this will be a name that just pops off of that. All right, let's take a look at 4. Now, right now, my target is roughly 104. Fairly tight on the stop, roughly 88.50, just really tight just because of the structure of this move. Once that breaks, I want to just take profits and move on. Now, Paycom was just an extension play, which you don't see me do very often, but at this point, it's worked. So, hey, works for me. Risk is roughly 255. I'm really tight on this. Breaks below this candle that we have here, I'm out, which is basically BE. Target right now is roughly 265, but we get above this 280. It has room to run up to 360. Don't know if I'm going to hold it through that or wait till we get a back test and then try and reload. But I do like the way this is reacting, especially in the current market climate that we're in. It's acted very well, and it happens to be on the side of names that are benefiting from AI and the infrastructure and cryptocurrencies and digital billing and all of that. And they're a big benefactor there. All right, let's look at Monster, or MicroStrategies. I keep calling it Monster. MSTR, roughly risking 335 here, which is the number we're at. I think we continue to about 539 on this. This is a play on Bitcoin. However, I'll be candid, I really wanted a solid back test off of Bitcoin's move to 103 to really build my conviction for this, which is one reason I don't have a position on. So once we get that 103, then I have conviction and I'll add this to my long term. Right now, I'm only in, with that in mind, let's take a look at Bitcoin. So again, risk is roughly 103,500. I will close those January contracts if that 103,500 breaks. So we close below it on a weekly basis. I will take those positions off because now we got a back test potentially to about 96 minimum if that's the case. So then we're going to completely unwind here. And a reversion to the mean is not unusual in Bitcoin, but I would love the opportunity to buy it back at 96. For me to take, I'm going to call it a day. We'll see you next time. You're welcome. RG, Tom.